Welcome back to episode 2 of Operation Housing Freedom.
Seems like we were just here a minute ago.
I know, man. What's up? How you doing?
Doing good, doing good. You know, just first month of the new year, kicked off kind of crazy. So, yeah.
January's in the books.
Yep. It's been a long year already.
Yeah. As always, I'm Brian O'Connell with Chinati Realty. You can catch me on socials on any platform, Brian O'Connell 3RD. And this with me is Ron Stroop. What are your handles? You got different ones.
RonStroop.va Home Loans for Instagram and just Ron Stroop on Facebook.
What about TikTok?
I have no idea. Probably RonStroop.va.
I think that's what it is.
Yeah. Yep.
Awesome.
I'll get that cleaned up for the next episode.
Yeah. I switched to it. I copied my inspiration, Mr. Tom Toole.
Oh,
I copied him a while ago. And,
that's the second Tom Toole name drop on consecutive
I know.
podcasts here.
I'll probably drop it later on today, too.
There you go.
All right. So before we get into it, if you feel as though you get some you get some knowledge and some value from this podcast, make sure you like and subscribe. Hit the bell button. Stay up to date with all of our content. If it's on social media, Facebook you're watching this on, make sure you give us a follow. Very much appreciate it. And without further ado, let's get into it.
And feel free to reach out to us.
Absolutely.
You know,
Yeah.
message us or whatever. Call
Send us
us
a message.
Yep.
Anything.
We will get the info to you that you're looking for.
Even if you're not in Massachusetts,
Yep.
we have a very vast referral program, vast knowledge across the country.
Definitely.
Could probably figure it out around the world, too, if we really needed to.
There you go. Go global.
If you're watching us in England for some reason. Awesome. So, without further ado, let's get into it. First item on the agenda is the First Responders Program rolled out by Loan Depot.
Yes.
We promised the folks last episode we'd talk about it. We ran out of time, so we're going to kick it off.
All right.
Here today.
Yeah, this is a great. It's not a mortgage program. It's a credit that we're giving to our first responders as, you know, a small way to thank them for their service, you know, and what they're doing out there. So law enforcement, fire, EMTs, paramedics, they'll qualify for a 0.5-point credit that Loan Depot is giving to them. It's real money. And what does the 0.5-point credit mean? It's 0.5% of the amount that they borrow that will credit towards either their closing costs or they can use that 0.5-point credit to buy down their interest rate. So on a $400,000 loan amount, it's about $2,000, which in any market, it's always helpful to, you know, have some, you know, it's so tough to save for a house right now.
Yeah.
That anything that we can do to give back, you know, so it's a nice way to give back to the first responders.
Absolutely. And that does not include healthcare workers, correct?
It does not, no.
Unfortunately,
no. But we do work with attorneys that do provide, you know, credits for fees. So
exactly.
Yep.
That was going to be my next question to you. So Loan Depot gives their credit.
Yep.
You give your lender credit. We have other partners who we've talked to about this program as well.
Yes.
The attorney partners that we have for this, they offer $250 settlement fees.
Yes,
correct?
which is about half of what most settlement fees are.
I think it's less than half.
Yeah,
to be honest
probably.
with you. Yeah. Based on
And
the HUDs that I've seen lately.
And they're doing a 10% discount on title insurance. So it's a nice little added benefit. And then you've got a pretty cool give back yourself.
Yeah, man. I so through this I've kind of tossed around different ideas, but anybody that we do this with the First Responders Program, my disc, you know, what I'm offering is a first year's home warranty program.
That's awesome.
Paid for by me. And then obviously you can choose to continue the contract with them or decline it, whatever it is. And I wanted to kind of jump into that and kind of talk about home warranty programs.
Yeah, what does it cover?
Yeah, so it covers home insurance, right? It's different from home insurance. It's not home insurance.
Right.
It's it's its own entity. So home warranty programs cover everything that home insurance doesn't. They cover your appliances. They cover a lot of maintenance kind of things like that. For instance, if a tree falls on your house, you're going to call your home insurance provider.
Sure.
But if your stove goes out, your refrigerator stops, where your heating system stop working, a lot of people don't prepare themselves or don't think that kind of stuff can happen, and they don't know what to do. And those are hefty repairs, right?
Yeah, they're not cheap.
No, they're not. And so with a home warranty program, every property is different, but for the most part, you're going to pay an annual premium. You can pay it monthly. You can pay it up front for the year. And then for the one that I recommend is American Home Shield.
Yep.
I believe their rates changed. I believe it's $100 to $125 per service call.
Okay.
So you call them, you say, let's say your refrigerator stops working. You call them, they'll send a technician out to you within 48 hours, I believe. It's either 24 or 48, but I'll go with 48 to be safe. They send a technician out to you within 48 hours. Somebody local that they source the job to. And that's the only fee you're going to pay. You're going to pay that service call fee.
And that's it.
And then outside of that, American Home Shield, if you'd like some more information on them, I have the regional reps phone number that you can connect with. But they will cover most, if not all, of the costs to replace the item at value.
Yep.
Now, you want something, you buy a house with an older stove and you want a nicer stove, they're going to pay the replacement cost. But you can't work it out to them to where you cover the additional expense to get the higher end quality item as well.
So you can just cover the difference.
Exactly.
That's
Covers, you know, your kitchen appliances, your refrigerator, your stove, your dishwasher, that kind of stuff. You can cover washers and dryers. You can cover HVAC systems, heating systems. I believe you can, because we're in our region, you can cover oil systems as well. Basically,
It's a nice added benefit for
dude,
our
and a lot of
first
people don't know
responders.
about it.
Yeah, I mean,
That's available to anybody, by the way. It's not just first responders. You know, the American Home Shield program. Just if you are a first responder and you purchase your home through us, I'm offering that
That's great.
up front on top of any other closing gift idea that we get. Right.
Gotcha.
So, yeah, the first responders program is really cool. I was super excited to talk about that.
Yeah.
So I'm glad we jumped into that. All right. So
What's on the agenda next?
yeah, so we talked about the first responders program, running through a little quick. So I think right now we're only a few minutes in, but we're going to take a 2-minute break.
Okay.
We will be right back, watch some commercials for the folks watching on television, and we'll
What are we chatting about next?
right afterwards, so don't go away, we're going to talk about VA loans.
Perfect.
We're going to dive deep and
Awesome.
get into eligibility requirements, who's, occupancy and everything else of the sort. So we'll be right back.
Cool.
All right, we're back. Thank you for joining us. Thank you for returning and not clicking away.
Bring up my favorite subject.
We're super excited. VA loans, man.
Yeah.
Let's talk about it.
Made my career on VA loans.
Yeah.
It's part of just who I am. I got into the business because as a veteran, I had a really bad experience with my first VA loan, and it motivated me to get into the business. Been doing them for 26 years. So let's jump right into them.
Awesome. So, first thing I wanted to talk about was the service requirements.
Yep.
How long did you have to serve, and in which different branches, or rather, different service types? So,
Yep.
our active duty folks, for those folks who served active duty,
So for active service members, they need 90 days of continuous service. So 90 days after their 90-day active service, they can qualify to buy a home. For veterans, it depends on when they were in service. So from during, the global war on terrorism, were they a Vietnam vet, were they a World War II vet? It just depends on their time in service. For the most part, what I tell people is 24 months of continuous service. So being in the service for 2 years, or 90 days that they were called to active duty. So those are the requirements outside of being, honorable discharge. You had the list earlier. Medical discharge. There were a few things.
It's honorable and then general under honorable,
Yeah.
which there's a bunch of different conditions under there. But
Yeah.
and then for our guard and reservists,
That's changed over the past few years
Yep.
because it used to be across the board 6 years of creditable service. So Anyone in the National Guard, what does 6 years of creditable service mean? It means that they did their 1 weekend a month, 2 weeks a year for 6 straight years and got enough points to qualify. They still, a lot of Guard members still need that, but they changed it to 90 days of active duty time, which is Title 10 orders.
Right.
So our Guard and Reserve members now, we're able to qualify more of them, especially think about it over the past 20 years.
Yeah.
This global war on terror. How many Guard and Reserve units got called to activation?
Oh, yeah.
A ton. Even during Desert Storm, which I served in, there were a ton back then. So it's good that it's opened up to help more veterans.
Yeah. If you were one of those guys that were or National Guard or Reserve, so basically what we're saying is if you didn't deploy, you didn't get called to Title 10, if you served your 6-year period and got a honorable or general discharge, you do qualify for the VA loan. And that's and a lot of people
absolutely
haven't heard already how long you need to be in. And so that works. 90 days of active duty orders or 6 years of creditable service for National Guard or Reserve.
And veterans can go right on to e-benefits through the VA website and get their certificate of eligibility there. So it's super easy to do, or they can get it in touch with a lender like me, and we can get one done pretty quickly. All you need is your DD-214, so your discharge paper. But do you want to talk about sort of what a VA loan is, just to make sure people understand that?
Absolutely.
Okay. So once you know that you're eligible for a VA loan with your service requirements, what is the benefit of the VA loan versus other programs? So for veterans, a VA loan is a zero down payment program, which is great. So you don't have to, you can put money down, but you don't have to.
Yep.
There is no private mortgage insurance, which is a huge benefit because that could be a few $100s a month on your monthly payment that you're not going to have to pay now. So the VA is guaranteeing up to 25% of the purchase price, or the loan amount, I should say, because it's usually 100% financing. So VA is going to guarantee. It's not, VA doesn't actually lend
I was just about to say that.
Yeah,
exactly.
They don't lend the money. The
VA
lenders
isn't
are
the
lending.
lender. There's different, because a lot of people will go to the VA website and they'll just automatically apply through USAA or Veterans United or any of those folks. But there's nothing necessarily wrong with those avenues.
Sure.
But the VA doesn't actually supply the funds or lend on the property. They are, like you said, guaranteeing the lender, whoever that might be, whether it's Loan Depot or any other loan entity out there, they're guaranteeing them 25% of the loan value in case the veteran decides not to pay the loan or can't pay the loan or whatever life situation happens to where they can't make their mortgage payment, they default and they get foreclosed on.
Yeah. And that's what separates VA from the other programs like a regular conventional loan or an FHA type of loan that non-military people would qualify for, because the private mortgage insurance is going to kick in if they go into default and basically reimburse the lender if they have to foreclose. In this case, VA is doing it for veterans. So those are some of the great benefits of a VA loan. There's also no loan limit. So there used to be loan limits. It used to be based on, whatever market you're in and what the standards were set at. VA took that away several years ago. So if someone qualifies to carry $1 million mortgage payment, they can purchase it with VA, zero down payment.
It's pretty sweet.
Yeah. VA loans, some of the other benefits of it, we talked about this before we started. So even though it's a zero down payment program, you do have to have some type of deposit money up front.
Yeah.
And maybe you can talk a little bit about that on the real estate side, because technically VA doesn't, or lenders don't require a deposit.
Right.
We don't care if there's a deposit or not, but in Massachusetts, like any other state, people need to put a deposit down when they're buying real estate, correct?
It's like buying a car in the exact same. It's not like buying a car, excuse me, but it's like buying a car. When you go to the dealership and you do all your paperwork, you sign everything, dealership's like, all right, come back tomorrow and pick it up, but leave us $500 in case you decide not to come pick up your car. It's the same way, right? When you make your first offer and we'll deep dive into this. This is for anybody, but for veterans, right? A lot of people come into it with misconception. They can come in with zero money down, doesn't cost any money to buy a house. Unfortunately, that's not necessarily the case. There are some upfront costs when it comes to buying a home, two of which are deposits that are held by the listing agents in an escrow account. Okay, I don't have access to it. The listing agent doesn't have access to it. And the seller most certainly does not have access to it. Typically, these deposits are always negotiable. But typically, when you're buying a home, you have two deposits. One is initial. It's typically in the amount of $1,000 here in Massachusetts, and that's paid at the time of getting your offer accepted in writing. You're supposed to have it in within 24 hours of that written acceptance.
Okay.
So that's the first upfront cost. Again, that's held in an escrow account, and that's not accessed or spent or anything by anybody. The second upfront cost is the second deposit. And so after you get your offer accepted, you have a 10-day window to conduct any and all inspections, whether that be your traditional home inspection. For VA, there's other ones involved, which we'll get into later. You have that 10-day window, and then after your inspections, negotiations, renegotiating repairs, or the purchase price, you're going to owe your second deposit. Typically here in Massachusetts, while it's always negotiable, it's in the amount of $9,000.
Okay.
And that gets held in an escrow account as well. Nobody has access to it. It's in its own escrow account, and it sits there until the closing. Okay? For veterans, you don't have to put any money down. So if you are not putting a deposit down, that money can come back to you at the closing table in the form of a check. Correct?
Correct.
Exactly.
And that's where I think a lot of the confusion from veterans comes into play. And it's just because, they don't know about it, and it's our job to educate them on this.
Right.
So yes, even though it's a zero down payment program, you do have those deposits that you have to, make. But you're right, you can get that money back after the closing if you get a seller credit to cover your closing costs. So,
Which I was about to hop into.
Yeah.
So those deposits are really in good faith for the seller. They're basically holding that amount of money so that they don't go off and sell it to anybody else. It's good faith on both sides.
Sure.
You offer to buy their property. They're not going to sell it to anybody else. Here's our basically collateral.
Yep.
Right. And so that's why you give them a deposit. That's why you pay a deposit. A lot of people might not understand why am I giving a deposit in the first place? I'm going to buy this house. I'm not going anywhere. Well, it's in case you do.
Yep.
And 90% of the time, those deposits are refundable, depending on the circumstance, which we can get into.
So if the transaction fell apart for whatever reason, inspection doesn't go the right way, or
the way you intended it, exactly.
So both of those deposits would come back.
Correct. Okay. And really, in the only situation where you don't get your deposits back is if you've already signed a purchase and sale agreement, and you've gotten halfway through the deal, and all of a sudden you decide, nah, I don't want to buy a house anymore. Right. I'm just going to stay here and rent, or I'm going to stay here with the parents, or whatever the case is. There's nothing related to the actual transaction. It's the reason why you're walking away.
Okay.
It's just you've got into it. You got in over your head. You got too excited, and now you're regretting every life decision you've possibly made, and you decide that you don't want to buy the house anymore. There is ways to argue it and to try to get around it and fight it. For the most part, if that were to happen, I've never had that happen. Have you?
Nope.
All right. Let's not start now. But so that's really the only reason why your deposits wouldn't be returned to you. If your inspection doesn't go the way you intended it to, if your appraisal doesn't come back the way it's supposed to, which we'll deep dive into at another time what the appraisals are. Yep. So those are two of the initial upfront costs when it comes to buying a home using a VA loan or any home. Right? The third upfront cost is what I tell all buyers is your traditional home inspection.
Yep.
That fee is non-refundable. The day you conduct your home inspection, you owe your home inspector their fee. Typically, I like to say it's between $400 and $700.
Okay.
I don't think most people won't do it for under $400, regardless of the size of the unit.
Right.
The bigger the house, the bigger the fee.
VA does not require a home inspection.
Correct.
They do not at all. So you don't have to have one done, but I think people would be crazy not to have a home inspection done.
I helped 9 people buy homes last year, including myself, and only one of them waived their home inspection. I only kind of allowed them to waive the home inspection because they were professional flippers.
Okay.
They had bought and sold
Yep. So they had some
50,
experience.
100, tons of experience.
Yeah.
Any other buyer I had, first-time home buyer especially, 8 of them were first-time home buyers last year. None of them had to waive their home inspection
Okay.
in the year 2023
That's great
Yeah.
because so many people got into trouble waiving home inspections. So,
because there's different ways around it.
yeah, absolutely.
You give terms and conditions that are suitable for the seller.
Yep.
Say, hey, yeah, it's
Let's-
property to property. So,
Let's talk about, with those inspections, what is important for a veteran to know with the home inspections.
okay, we can get into that. So, traditionally, right, what you're going to look for is health and safety hazards. Mold, peeling paint, missing handrails, roof. There's roofs that are in okay condition, and then there's roofs that are in really bad shape.
Right.
Those are something you're gonna want to look out for. You're gonna want to look at your systems, your heating, your cooling systems, your water heater if you have one, oil tank, especially if you have one. See what kind of shape that's in. If that's leaking in any shape or form, that's gonna have to be replaced. And then outside of that, that's really the biggest hitters for anybody, but especially somebody using a VA loan to look out for.
And as an agent, taking your clients
Exactly.
out to see a property and walking through it, you kind of know what to look for.
Exactly. And that kind of, we're tailing off and we'll come back to it. But when it comes to buying a home, that's why it's super important to have a discussion with a lender and see what kind of financing option you're going to fall into. Because different financing options have different restrictions to them and conditions that need to happen. If you're using a conventional financing program, there are less restrictions than with FHA or VA.
Right.
Because when it comes down to it, it's not the inspection that passes or fails, it's the appraisal that's going to come into play.
Yeah.
So when I have a client that I'm helping buy a home, and it's super helpful when I already know what financing option they're going to go with.
Yeah.
Because
And if they are a veteran, you know exactly
absolutely
what you're up against.
Yeah, because then at that point you see these issues and the buyer and the seller may not be willing to fix those, or there's too many of them. You don't even pursue making an offer.
Yep.
You don't go in there and get your hopes up. So that comes with experience, of course, but it's super important. I mean, a veteran especially, I'm going to know what's going to fly and what's not going to fly when it comes to the VA appraisal.
So I mentioned that VA does not require a home inspection.
Correct.
But they do require a couple of things.
Correct. So the VA, a lot of people say that VA inspections are difficult and too much and blah, blah, blah. Here are the only 2 things that separate VA from anything else. The only required inspections you need to have are a wood-destroying pest inspection.
Yep.
Okay. And if you have a private water, if you're on well water as your primary source of water, you need to have a water quality inspection done.
Yep.
If you're on town water, you don't have to have it.
Right.
That's it. That's it.
Pretty simple.
Yeah. Pretty simple.
Yeah.
Simple
and
enough.
I think our point here is, I think veterans aren't taking advantage of their VA benefit because they don't know about it, or they've heard things that they were misinformed about it.
Yeah.
From the real estate and lending community, or just family and friends.
Yeah.
And I think it's like you said, it's so important to really get into it and understand it. As far as the appraisal goes, VA's ordering that. So that's really the only interaction that I have with VA is they order a third-party appraiser, and they're going to go out there. And they're looking for the value of the property, but also, if a veteran's paying $500,000 for a house, they want to make sure that it's worth $500,000.
Absolutely.
And then they're just going to look for those health and safety type of issues.
Yeah, exactly. So to kind of recap there really quick, when it comes to the VA inspection and appraisals, immediately when you're going to look through the house, you're going to want to look for health and safety hazards like issues with the roof, mold, peeling paint, missing handrails, stairs that aren't in good condition. They can be in good condition as long as they're not in bad condition, right? And anything else that could pose a safety hazard.
Yep.
And that's what the VA appraiser is going to look at. So you're basically kind of pre-gaming the appraisal in a way.
Yep.
Right? So we'll kind of revert back to those upfront costs that are due when buying a home, especially for a veteran.
Right.
So we've covered the deposits.
Yep.
You owe 2 deposits, typically in the amount of $1,000 and then $9,000.
But again, negotiable.
Again,
I've
negotiable.
seen them lower. I've seen them higher.
Typically, they're about $1,000 or not, and $9,000, the 2 separate ones, but they are totally negotiable.
Right.
Absolutely. Your inspection fee, the day your inspection is conducted, you owe the appraiser their inspector their fee. That's non-refundable
Yep.
once that's done. And then the 4th upfront cost when buying a home is the appraisal fee.
Yep.
And that's typically in the amount of $500 to $600
Yeah.
around there.
Exactly.
Right, and that is refundable up until the point where the appraisal is actually conducted.
Yeah, once it's done.
Once it's done, it's done.
Because it's a third-party appraiser that VA is hiring.
And
so-
they need to make their money and they need to put food on their table.
Yep.
So
Absolutely.
there's 4 right there. Those are any average home buyer. Those are the 4 upfront costs you're going to come up with outside of closing costs when it comes to buying a home.
Yep.
Now let's talk about what separates VA from any other loan program when it comes to upfront costs.
Yep.
The funding fee.
Yes.
Okay.
Yeah, the funding fee is a percentage. So this is how VA funds the program.
Right.
They charge a funding fee, and the percentage is different. They just dropped it last year to, I believe it's 2.15%.
Yep, I think that's what we talked about.
First-time home buyers. If you use it again, then you're going to pay a higher fee, and this fee gets rolled right into the mortgage. So lenders aren't charging it; that money goes directly to VA. I always see it financed. I think you asked me earlier
I did.
they can, if they had to pay it out of pocket, they do not. So 2.15% on a $500,000 house, it's $10,000. It's a good amount of money, but it's rolled in and financed and paid over a 30-year period. So it's not a huge hit to the monthly payment. But that funding fee gets waived for veterans who have at least 10% disability.
Service-connected disability.
Correct.
And you don't have to be permanent in total in that case, right?
No. As long as they're over 10%, which I think is the minimum for VA anyway.
It's just like you got tinnitus. Congratulations.
Yes.
You got
exactly.
10%, you got tinnitus.
Absolutely. But
So-
the funding fee, VA has to charge it to keep the program going.
Yeah, it's super important,
Yeah.
right? I mean, for those who aren't service-connected, let us know, especially if you're here in Mass. We'll get you connected with somebody local who can help you get that service-connected disability payment. Right?
I always ask the question, if you are going to be applying for a service-connected disability through VA, get your application in before you apply for the mortgage.
Yeah.
And then even when you buy the house, if you pay that funding fee and it gets rolled into the mortgage, once your VA service-connected disability is approved, that money gets refunded to you.
In cash.
And yeah.
Really?
Yes.
Oh, that's interesting.
Yeah.
Huh.
So I've had several veterans over the years where they get their application. They tell me, I am applying for service-connected disability. I don't have it yet. Okay. Let's make sure you apply through VA before I submit your mortgage application.
So to recap really quick, the funding fee is charged by the Department of Veterans Affairs.
Yep.
So that they can continue the program. Because again, the Department of Veterans Affairs guarantees the lending institution 25% of the loan amount in case the veteran defaults and can't pay their mortgage payment, right? So that funding fee is what's used to continue the program for years to come, because there have been events where unfortunately veterans have defaulted on the mortgage and they've had to come up with that 25% of the loan amount and give it to the lender.
Right.
And that for first-time use, and I think next episode we might dive into VA and how to use it multiple different times.
Right.
I think we could do that, or if we have time today, we'll dive into that. But so the first time you're using your VA loan, it is 2.1%, 2.15
2.15.
of the purchase price
Yep.
that the VA is going to charge you as the buyer,
And roll it into the mortgage.
and you can roll it right into your mortgage. And the way you are exempt from that is if you have a service-connected disability.
Correct.
Sweet.
Yeah.
That
So-
makes sense.
Awesome program.
Yeah, VA's awesome. Love it. And again, if you are not already service connected, and you're here in Massachusetts, get with your town's veteran service officer immediately.
Yep.
Have that discussion with them, because if you've served, you were disabled or have issues after, and you can prove that it was connected, you deserve to get that taken care of for you.
Absolutely.
All right. Awesome. So outside of that, I believe we've covered everything to do with what we wanted to talk about today with the VA program. And
yeah, if anyone has any questions on it, if there are any veterans out there that have a question, feel free to reach out to us. Or if you have a family member who's a veteran or a friend, I just, not enough veterans know about the VA home loan benefit or are misinformed about the VA benefit. And I think, I forget what the number was. I think it was like 13% of veterans have taken advantage of their VA home loan.
Yeah.
And it's just such a small percentage.
So that would leave 87% of veterans haven't taken advantage of it.
Yeah, it's a big number.
It's a big number.
Yeah.
It's a bad number.
Yeah,
We got to
absolutely.
fix that. We don't just work with VA. We work with any kind of home buyers. I work with any kind of home sellers.
Yep.
Right? But that's what we're super passionate about. So anyway, to recap what we kind of just talked about, VA eligibility guidelines, discharge requirements. Oh, we didn't cover occupancy. We'll cover that really quick before we take our break.
Sure.
So the VA and the lender expect you as a veteran to occupy that property within 60 days of closing. And that's, that it's loose. Because if you're deployed, you're overseas, you're stationed somewhere else, and you bought the home so that you could move somewhere comfortably, obviously that doesn't apply, might not apply. But typically they want you to be in the home within the first 60 days of buying it. And you only have to live in it for not 2, not 3, not 4, 1 calendar year.
Yep.
Before you're eligible to rent it to others or sell it.
No, you can sell it.
You can sell it anytime, right?
You can sell it anytime.
Rent it to others or use your, excuse me. Thank you. Before you're eligible to rent it to others and go purchase something else.
Correct.
Using your leftover eligibility.
Right.
Okay. So,
Absolutely.
Thank you for that.
Yeah. No, absolutely.
All right. So right now we're going to take another 2-minute break.
Okay.
When we come back, we're going to talk about how to properly prepare yourself for the spring market. We're going to cover first-time home buyers or buyers who don't already own.
Yep.
And then we'll talk about homeowners who are looking to sell their current home and go buy something new.
Go buy the next place.
Go buy the next one.
Okay.
All right. We'll be right back.
We did have temperature.
Sometimes it's hard to know where to start when the cycle never stops. You're not alone. Visit maketheconnection.net to learn more.
There have been many members of this corporation who have served voluntarily and spent many hours of their personal time to work toward creating a local network with varied programs to serve the community of Bridgewater. The BTV Access Corporation over the years has provided a platform for many individuals to express their creative ideas and different programs of interest to this community.
This is a community facility. BTV Cable Access is here to present and to represent all the voices in town, all of the varying attitudes and ideas and feelings that Bridgewater has.
In 5, 4, 3, 2.
Welcome back. Thank you for sticking around. Let's talk about how to prep for the spring market.
Yep.
It's February, beginning of February. Spring market's coming. If you're not already active in the market, you want to get started thinking about buying a home this year in 2024, making it your goal. We'd love to help you out with that, regardless of who you are, whether you're a veteran or not. Love to help you out any way that we can. And a quick note that I meant to add before we left for the break. If you've had, I want to hear some experiences, good or bad, right? If you haven't worked with us, and you had your VA horror stories, you're a veteran, you bought. I want to hear some stories, some unfortunate stories.
Yeah, so throw those in the comments.
Yeah, throw those in the comments.
And we'd love to see them and respond to them.
I hate to see them. It makes me angry. But it's what it's going to do is going to help us to kind of correct those. We can respond to you, see how we can help you better the next time, and make sure that doesn't happen to the next person.
Yeah.
That's the reasoning behind it. Right? I don't want to see those.
And
I hope those don't happen, but I didn't know they do.
And I started the VA discussion without telling my horror story, but basically
Oh, yeah.
saying that I had a bad experience with it, and that's what motivated me to get into lending and why I'm doing VA loans 26 years later. So, yeah, definitely want to hear those stories.
Yeah. So we can make sure that doesn't happen again.
So, spring market, it feels like it's already here. The weather might not feel like it.
No,
But
no, man.
it
I'm
does-
sick of the cold.
But I would say as soon as I got back to work from the holidays, January 2nd, it's just been
Been busy.
super busy.
Really busy.
A lot of potential buyers who were sitting on the sidelines. Last year, when rates were higher, I think they had not only their New Year's resolution, but now are really motivated in getting back into the market. The one thing that I'm seeing a lot of is people not prepared.
Yeah.
Whether it be they don't have their paperwork together, they're going out to look at properties without being pre-approved, they fall in love with it, and then they run into a roadblock with getting the pre-approval done for whatever reason. And I think, this topic of how to get ready for buyers, and you're going to cover sellers, right?
Yeah.
So-
We'll cover both.
Yeah.
I'd like
So-
to ask you, I know that I have the answer in my head to my own question, right? What's the biggest fear or misconception when it comes to the words pre-approval, going to get a pre-approval letter? What are people most fearful of?
Getting their credit pulled.
Yeah, yeah. Hard credit inquiry. That's going to hurt my credit.
Yeah, yeah. And I couldn't answer. The biggest question I get is, how much is this going to drop my credit score? And I have no idea. No one really does. I've talked to the credit bureaus and they don't know. If you have super, super high credit scores, like over a 780 credit score, one hard inquiry is not going to hurt you with a mortgage inquiry. But we do soft credit pulls.
Yeah, so let's talk about the actual preparation stages before we're ready to submit offers.
Yep.
How do we get prepared for the spring market?
Yeah.
And
First
when
thing
you
is
go,
to check your credit.
yeah, when you have a discussion with a lender, whether it be you or somebody else local, I don't think too many people can do the soft pulls. But
Yep.
when it comes to getting prepared for the spring market as a home buyer, you do not necessarily right away have to do a hard credit inquiry,
Right.
which is what most people are afraid of. You do a soft credit report. How does that work?
So basically, it doesn't count as an inquiry against you, so it's not going to affect your score. It's giving us so credit bureau, there's 3 major bureaus, TransUnion, Equifax, and Experian. We pull a tri-merge report, pulls from all 3 bureaus, and merge it into one report. We get you 3 scores. With the single soft pull credit report, we're only pulling from 1 bureau. Again,
Okay.
it's not a hard inquiry, but we're pulling from one, which is TransUnion. And that's giving us a really good idea of where someone's credit is now. And is this something that's going to allow them to get a pre-approval done? Or if it's not, let's put together a game plan and work with you to get ready to buy in the next 1, 3, 6, 9, 12 months, whatever that time frame is.
Yeah.
But I think I've seen just with, inflation pushing budgets to the limit, student loan payments kicking back in,
That's a big
credit card rates super high, home equity line rates super high. I've seen a lot of credit issues so far this year.
Yeah, I think that's the biggest issue we run into, unfortunately.
Yeah.
Is credit issues. I mean, it's, I'm not going to be naive. It's difficult to, home affordability across the board is difficult right now for a lot of folks. people are digging into their credit. I think the report I saw at the beginning of this year, I think consumer debt is like pushing $5 trillion.
Yeah.
And that's not mortgages.
No, non-mortgage related
It's like
debt.
cars and credit cards.
Yeah.
Yeah.
So everyone's feeling the pinch.
It's awful.
So
yeah.
To
when
get
it
back
comes
to that, though, I think, instead of trying to avoid the issue of getting your credit pulled,
Yeah.
at least let's take a look at it. That way you know what your game plan is going to be.
Yeah. And a lot of people are afraid of realtors and mortgage officers. Super, a lot of them are salesy and pushy and don't know how to take no for an answer.
Right.
We're not going to do that, right? It's about you. It's not about me. Not about me making money or pulling credit, right?
Yep.
We're going to go at a pace that's comfortable for you.
Yeah.
But when it comes to getting prepared to buy a home, whether you're a first-time home buyer or you already own a home and you're looking to buy something new, it's super important to at least discuss budget.
Yep.
What kind of price range are you going to fall into? And a lot of people come into the market and they say, I want to buy a home for $500,000. Is that because that's the price tag that you want to pay? Is that because you're finding homes that fit your criteria in that price range? Or is that because you're comfortable with the monthly payment it's going to cost you to borrow that much money?
Right.
I think that's where a lot of people are faltering right now and misunderstanding is when you discuss your budget, you're not getting a pre-approval and pulling your credit and ruining your credit. It's more so about what is this going to cost you every month with the current interest rates?
Yeah.
Because you might find out that, here's a positive instance. Had a buyer who went and saw a condo in Bridgewater. It was listed at about $300,000. Then she went and got her pre-approval letter because she was going to put in an offer, and she found out she qualified for up to $600,000. She thought she could only buy at $300,000, and the monthly payment still fit in her budget.
That's great.
So instead of buying that condo, which she was settling for, she ended up actually going to be able to buy a single-family home that was much bigger. I was super happy for her.
That's great.
Right? That's a positive instance.
Absolutely.
Right? On the flip side, the unfortunate and the negative part of it is if you go and you start falling in love with houses, haven't discussed what that's going to cost you every month, and then you're ready and giddy and excited to write an offer, and you find out that it's $500 a month outside of your budget,
Yeah, it's that
then you're
sticker shock.
shattered,
Yes.
and you're super discouraged at that point, and you might not even achieve the goal at that point.
Right.
So it's when you're preparing for the spring market, it's super important to discuss your budget, and that doesn't mean go pull your credit. Like I've said like 100 times already today, I'll stop saying it. Figure out what it's going to cost you every month to go buy the home that's going to fit your lifestyle.
Yep.
And are you going to be house broke? Because we don't want that either.
No.
Right? So the numbers that a lender is going to go off of, they're going to approve you for the most amount of money that the bank will allow you to borrow in terms of a monthly payment. What are we inevitably going to work off of, though? If you as a buyer, Ron, go get a pre-approval letter for $600,000 because that's what the bank is going to allow you to buy.
Yep.
But that $600,000 is going to cost you more per month than you're willing to spend. Guess what? We're not going to go look at the $600,000 house.
Right.
We're going to stick, me, you, and the buyer as a team, we're going to stick where you're comfortable paying every month.
Yeah, and I get the conversation on both ends.
Yeah.
I have people who, want to talk about price range. I usually try to talk payment range first.
Correct.
Like where do you want your payment to fall so then we can take a look at the corresponding price range.
A lot
So
of
they
them,
go,
it's like, I haven't even thought about that.
Yeah, I do get that a lot too.
Yeah.
I haven't even thought about what I'm comfortable with paying per month, which goes back to budgeting. What are you comfortable with paying every month for your principal and interest, your property taxes, your home insurance, and your private mortgage insurance if you're putting less than 20% down? What are you comfortable with? How does that fit into your lifestyle? Because we were not taking into account that we take into account credit debt and their mortgage payment. But
Right.
we're not looking at everything else that they're paying out.
Phone bill,
Healthcare, phone bill.
cable, phone
Cable,
bill,
streaming.
electric,
Yep.
heating. That stuff's not accounted into
Right.
the budget. That's a lot of people. It's where a lot of people end up in failure because they haven't discussed those. I mean, obviously those prices and those monthly obligations fluctuate, but that's not you're not taking that into account.
Right.
So, home buying, it is a lot, and it's a lot of emotions, a lot of information you're taking in, and those things can kind of get neglected, which is why it's super important, whether you're a first-time home buyer or an experienced home buyer that might not have done it for a couple of years. The market's obviously changed. Once you discuss your budget with Ron or any other lender in the area, what I like to do for buyers right out of the gate, we might go see a property or two, right, if that's where we're going to meet, but we got to sit down. We're going to slow things down, pump the brakes a little bit. We're going to set expectations, kind of what we talked about earlier when it comes to inspections, appraisals, and we'll dive deep and be able to answer any of those questions. Now, if you have one and you're listening to this anywhere around the world, if you have a question, please feel free to drop in the comments, send us a message. And if you're getting value from the podcast so far, make sure you hit the follow button to stay up to date with all of our content. However, we're going to sit down and have those conversations and answer those questions and set the expectations right off the bat. Because a lot of people will go look at a home. The agent will have them write an offer without even consulting the lender to make sure it fits in their budget. And then you go through the inspection process and negotiations, and you end up and you're like, wow, I hate this house, or I can't afford this house.
Right, that payment shock.
Slow down, set the expectations, get all of your questions answered. Whether you're working with us or anybody else, make sure your agent's sitting you down and having that conversation with you, because it's super important to make sure that you understand everything that's going on.
Yeah, from a lender perspective, I think it's incredibly important for me to have the conversation with people up front about budgeting.
Yeah.
If you tell me that you're okay with spending $3,500 a month for a mortgage payment, but you haven't taken into consideration some of your other expenses that are going to come up with buying a house. Now you're going to have, trash removal, or you're going to have,
that's one I didn't think about.
An oil bill that you didn't because you were renting an apartment or lived at home. So there are other things that you have to take into consideration. And I think it's irresponsible for lenders to not go through that process with, especially first-time home buyers.
But any buyer,
but especially first-time buyers.
How many lenders are actually sitting down having these conversations? Maybe like one out of every 25, 50.
The good ones are.
The good ones.
Yeah. Absolutely.
Yeah.
But yeah, I think that's, so we talked about credit. We talked about budget and making sure you're comfortable with your numbers. So what else are we talking about to get buyers prepared for the spring market?
And we talked about credit and how you don't have to do a hard inquiry right off the bat.
Yep.
Right. Soft pull doesn't affect your credit score. It sets you up for success.
Yep.
So if you're fearful of talking with a lender and discussing your budget because you're afraid of pulling your credit and ruining your score that you've worked so hard to achieve, you don't have to be afraid. You can get the soft pull.
Or if you're hesitant because you know that there's stuff that's going to be on that credit report, a lender can at least help. Yeah. We're not credit repair specialists, but we can at least
have one, though.
Assess it. Yeah.
Shout out Adam Briggs.
Yeah, absolutely. And we can take a look at it and help people get on a plan for that.
Absolutely. So Loan Depot can run a credit simulation to help people get on track. That's a shorter term, right? 3 to 6 months.
We can do 9 and 12 months.
You can do 9 to 12 months.
Yeah, we can do 1 month, 3 months, 6 months.
Loan Depot's algorithm and services.
Well, it's not ours.
It's
through TransUnion.
Okay.
So it is through a third party.
Right.
And there's no guarantee that the credit simulator is going to work, but we've had really good success with running people through a credit simulator, at least giving them a game and action plan that they can put into place.
It puts you in a better position at the end of the day. As long as you do the work, you do the things. I mean, we had our guy, I'm not gonna say his name, we had our guy we put that post out.
Yeah.
We worked to him for 10 months to get his credit in good shape. We had, I think we did 3 last year who ended up buying and closing toward the end of the year.
Yeah.
And
it might not fit your time frame today.
Right.
But at least
it's going to set you up for success and get you prepared.
Sure.
Yeah. So that's a really good point, actually. If you're in the position where things might come up and you just are embarrassed or don't want to deal with them or whatever your reasoning may be, might as well start dealing with them and figure out a way to strategically go about it.
Yeah.
Because you might not have to pay everything off to be able to qualify.
Yeah, absolutely.
You might not be able to. Yeah. We've seen a lot of people that, like, oh, I have $3,000 of credit card debt. I can't afford to buy it. Well, you can. Are you willing to, take on this new monthly payment, et cetera?
Right,
so
right.
That's for, a lot of that's for any type of buyer, but let's talk about the people who are in a home now, they own their home, and they want to move, right?
Yep.
As a homeowner, and you're getting ready to buy, whether you've been in that home for a year or 30 years, which a lot of those people they're still coming to market, and
Sure.
the house is too big,
Yep.
it's too much maintenance. So to put yourself in the best, there's two ways you can really go about that. As a homeowner looking to buy a new home, you can either sell your home and buy your new home simultaneously, which is a bit more complex. Or what I wanted to talk about with you is potentially going and buying that new home first and then selling on the other end, but how to strategically go about doing that.
So basically waiving the home sale contingency.
For the most part.
And breaking that down is,
Yeah.
they have a house that they live in right now.
Mm-hmm.
They want to purchase their next house, move into it,
Yep.
and then put this one on the market and sell it after the fact.
Yep.
So a lot of clients have had to do that over the past 4 years, 5 years, because it's such a competitive market that, the person that they want to buy their house from doesn't want to wait for them to sell.
Correct.
The two biggest obstacles with that are, do they have the down payment money to buy the new house now?
Right.
Or is it tied up in that property?
Correct. And I think a lot of people right now, the money is tied up in the property. And so
Right.
that's why I wanted to ask you, from a lender standpoint, when they're going ready to buy that new home, what steps do they need to take to put themselves in the best position possible before they go ahead and do anything?
So don't list this property for sale yet until you
Yeah.
have a conversation with a lender.
Super important.
Yes, because where is the money for the down payment going to come from? Do you have it in liquid cash in your bank account? Because lenders need to see that you've had, proof of funds. Have you had the money in a bank account for at least 2 months?
So I, Mr. Home Seller, do not have that.
Okay.
What are my
so
options?
Do you have a 401k that you can borrow against?
I do, but I don't believe it's enough for me to put a down payment down on the house.
Yep.
Or
Well, you might
I don't
not
want
want
to
to.
pull from it.
Yeah.
What are
absolutely.
what other options do I have?
Most people are sitting on the equity right now in their home.
And that's the equity, in short, is the value of the property minus the amount that you owe for a mortgage if you have a mortgage on
have
the
a
property.
mortgage, correct.
So if you owe $200,000 still to the bank, but your property could potentially sell for $500,000, that $300,000 is what's called equity.
Yes.
We'll simplify that because a lot of people don't even know that term.
Yep. Nope.
So-
I'm glad you did.
So you're sitting on the equity, the value that you have in your home.
Yep. How do you access it?
Yes.
Without selling it,
Yes.
or not selling it yet. Home equity line of credit
Okay.
is the most popular option, but I think it's one of the most misunderstood options.
Yes.
So you can apply for a home equity line of credit or do a cash out refinance. My suggestion would be to do a home equity line of credit where you're borrowing against that equity and you can use that money for the down payment on the next house. Now, most lenders will allow you to borrow up to 80% of that equity in the house. So whatever the value is minus the first mortgage that you have if you have one, and whatever's left would be your line of credit. If your house is listed for sale, then you're not going to be able to get a home equity line of credit because banks aren't going to lend on a house that's listed for sale. So I always tell people, hold off on doing anything, get your line of credit, get ready, and then you can use those funds to purchase the next property. Once you close, you can put this house on the market, or you can put it on the market, at any point during that time frame.
So the biggest part is if you're an existing homeowner and you're getting ready to list your home for sale to go buy a new home in the spring or anytime this year, the biggest point we're trying to make is it's super important to talk to not only your agent who's going to be listing that home for sale, but your lender who's going to be potentially financing your new purchase.
Yes.
Have those discussions, sit down, pump the brakes, set yourself up for success.
Absolutely.
And then when it comes to actually listing your property, it takes about 2 to 3 weeks from the day you decide, yes, I'm ready to go. It takes about 2 to 3 weeks from that day to actually sign on the ground, live on MLS, showing the house. this part's optional, I always recommend a staging consultation. Having a professional home stager come in, take a look around. They're not going to touch anything. They're going to make a bunch of recommendations. They're optional for you to take. I always recommend it. And they're just going to make the home most aesthetically pleasing to a potential home buyer, especially for the photos, which are going to come after. Staging consultant is about 3 to 5 days out when you're booking them. After that, we're going to book a photographer to come in and do all your photography, your floor plans, your drone footage, your virtual walkthroughs, all the video we're going to use to market it. And then comes the fun part. So my company, we're headquartered out of Chelmsford. I live, operate, and do all my business down here on the South Shore. We're headquartered out of Chelmsford. And then, so another part of that 2 to 3 weeks, my marketing team needs time to do their thing. And we're going to, when you and I sit down together as a home seller, I'm going to tell you all about the different gadgets and the marketing tools that they do, separate ourselves from different companies.
Yeah, your marketing team at Chinati is pretty sick.
Yeah,
man. They do some really cool stuff that I haven't seen other agencies do. So,
well, thanks for saying that.
Yeah, no.
Shout out to Lisa and Jason and the whole
Absolutely.
marketing team up there in Chelmsford and the ISAs as well, which we'll talk about that. As a home seller, we can talk about them and how to utilize them and leverage them. So all in all, when it comes to as a homeowner going and downsizing or buying or upsizing or whatever it is that you want to do, you want to go buy a new home, you're sick of the home you're in now, or just don't want to live there or have to relocate, whatever it is, have the discussions with your agent and your lender before you start making any decisions.
Yep.
With that, I think that kind of wraps it all up.
Awesome.
We're running short on time.
Are we up
We
against the clock?
We are.
Okay. Cool. That flew by.
I know, dude.
It was fun.
Yeah. So,
Well, I hope that if anyone has any questions or if you're gearing up for the spring market, which feels like we're already in, definitely reach out to us and, don't be afraid. Take that first step. I think confidence going into the spring market is one of the biggest hurdles that people have to overcome. So.
sit down, have those conversations, and get yourself fully prepared. If you feel as though you got some value from the podcast, want to learn more, have any questions, hit the follow button or hit the bell icon if you're watching on YouTube. Stay up to date with all of the content. We appreciate you listening and listening to us ramble for the last hour. If you have questions, you can reach out to me on Instagram, Facebook, and TikTok and YouTube, Brian O'Connell 3RD. And Ron, you can reach out to Ron at ronstroop.vahomeloans.
Yes.
On Instagram and TikTok.
Yes.
And then it's just Ron Stroop on Facebook.
Yes.
Or you can send us a message. We'll provide our phone numbers down in the description.
Yep.
Please don't blow my phone up at 2 a.m. But if you have a legitimate question, we'd love to take your call. With that, we'll wrap it up, and I hope you have a great day. We'll talk to you soon.
All right. Thank you.
Sweet.